Energy Road, and we are live. Listen, we're glad you joined us, and listen, we're going to talk a little bit about the market today, and we've got Brendan with us to talk a little bit about the weather. Man, I tell you what, with all this think tank all together, we could probably solve a lot more of the world's problems. What do you think?
I don't know. Can we? What do you think, Brendan?
Oh, fingers crossed. You can only wish, right?
Well, we probably have the capability, but actually the permission, that's probably a whole different thing.
The capability and permission, right?
That's right, exactly. So let's touch on fundamentals right off the bat here, Brian. We're Brian and I are trying to put fun back into fundamentals here. So let's see what we got.
Yeah. So listen, thanks for joining. We're going to try and keep it to about 30 minutes. We've got a lot to cover because we are going to talk, could NYMEX natural gas go negative? And we'll get to that later in the segment. We're going to talk a little bit about fundamentals, and we're going to talk about the possibility or the probability or the improbability of natural gas going to zero. Then we are going to close out with some weather and then recap. We are accepting questions. We will get to those towards the end, so feel free to weave those questions in. If we can answer them live, we'll answer them live. But if not, just a little housekeeping, we will get back to them. It might be towards the end. So again, we're going to try and keep it to 30 minutes. We might drift to 40. So let's take a look at fundamentals. And what has happened on natural gas is natural gas went from $9-10 in 2022 all the way down to $1.60 and down into the $1.50 range. But a big reason why is because of rapid expansion of production. Now, I have a slightly different viewpoint. We went from 90 BCF a day up to 105 BCF a day. Now, a lot of this, we're not going to cover it here, but a lot of the reason that we did this is during this period, we tripled our rigs, which increases the new supply in the United States. So we tripled the rigs to gain 18%, something like that. So we gained 18% by tripling the rigs. The rigs last year, towards the end of the year, started dropping. So that engine is slowing down. Now, what happened yesterday is we went from $1.60 up to $1.70 and pushing up close to $1.80. So a lot of people are asking why. Well, it has to do with, there was a headline, and Chesapeake cuts output. And that news headline that came out yesterday, roughly, I'll point you to the article for the exact figures, but roughly Chesapeake said we were going to, that they had 2023 production at 3.6 BCF a day. And then in 2024, their guidance is 2.6. So roughly 1 BCF a day. But if you think about it from a percentage wise, it's pretty close to 30%. So this is the dynamic of decline. Decline happens naturally. So production, when it comes online, it declines. Can you explain that, Bill?
So basically, when you have new wells come on, they are coming out of the zone. It's got a lot of pressure. As the pressure declines, and typically producers will produce as much as they can as they come out, sometimes referred to as flush production. And as that comes off, you get into what we call the hyperbolic profile of a decline curve. And Brian's got one up right there. And so what happens is that your first month is the most you're ever going to get out of that well. As it goes along, it declines significantly, sometimes as much as by 70%. I think what's interesting about this is Chesapeake is showing an average of 2.6 and what they say for 24. Mm-hmm. But if they're starting at 3.6 or above 3, that means they have to drop almost below 2 to average 2.6. And so their decline curve is going to look very similar to this. And we're going to see them, even though they will average for the year 2.6. They may come out of the end of the year somewhere around 2 or less in order to be able to average 2.6 if they're starting at 3. So you're going to see an interesting thing happening there with that company, especially with the merger with Southwest. That's going to be interesting to watch how they decide. Look at them,
and that's the reason that if you take a look at a global U.S. or not global, the U.S. production, and we're at 105 BCF. If the entire producer membership in the United States did the same thing, we're probably looking at what, 80 BCF, 85, something like that, 90.
Oh yeah, yeah. I mean, if everybody just stopped drilling, I don't know if that's going to happen. Most people legally can't stop drilling because of their leases.
Right.
But if you see a significant decrease in the drilling, which we've already seen a significant decrease, it could go even further. Let's say it went again, what we've seen so far. Let's say we drop another 100 rigs. You could easily see at least in the low 90s on production.
But this is the main reason. Let me take this to a daily. This is the main reason that we have been dropping, and we've dropped all the way down from recent highs above 3 down to $1. What was the low there? 152. So we kind of bounced off that, and I have my own projections. If you want to join Energy Rogue, you can figure out those projections because we talk about this every single day. And as a matter of fact, every single day. As a matter of fact, what's interesting is on Monday, which was a holiday, I sent a video to members in our Discord channel that 183 was the target that I was looking at. So that was a near-term target. And so there's two options. There's links below. There's two options to join us. One is Rogue Edge at $89 a month. The other is Rogue Premium at $179 a month. And Rogue Edge gives you access to all of these charts. Plus, you get a daily email right here that gives you charts for every single day of the week, a weekly email that gives you outlook for the week. And then in addition to that, we do have a weekly video that we do for our members. So that's what you get with Rogue Edge, which is $89 a month. It is a month-to-month commitment. If you want to commit to an annual plan, you'll get $79 a month. You can save $120. Rogue Premium is something that we just launched because this includes our Discord channel where we talk about trading ideas. We talk about what's happening in the market. The Chesapeake announcement came live on this, and we discuss all of the events in the market. But in addition to that, you can also connect with Bill and I. We will help you on your goals, your specific goals for your company, or if you're an individual, because energy prices will impact you. If you are watching this, you are curious about natural gas prices, crude oil prices, refined products, or electricity, come join us. We can help you. And it's a nominal investment for, let's see, should we say how many years of experience we have, Bill? Should we say that?
I think that we can easily say that we start measuring our experience in decades, not years. And
yes.
So that should help you there. And it's multiple decades.
Anyhow, you don't have to believe us, and it is a month-to-month commitment. So yeah, if you don't like what you see, move along. Fortunately, everybody that has come to us sticks with us for long term because what they realize is if they were curious about supply, demand, imports, exports, storage, pricing, forward pricing, what the viewpoints on the market are, if they're interested in that, $89 a month is a nominal investment in that critical understanding of what that market is. And then if you want a little bit more hand holding, that's where Rogue Premium comes in.
Well, it's not even that. It goes beyond that. Rogue Premium is for people who are really interested in understanding what the market does. You have access to our community, which is a huge thing. It's
Yes.
things we talk about all the time. You have access to Brian and I, and we've seen a lot. We don't talk about everything we've seen. We've seen a lot though, and we can help. That's the thing.
Yes.
That's what we do. Is we can help.
And
And
since we're talking Rogue Premium here, one of the people that is on the call, Brendan, we're going to get to Brendan a little bit later, but he is working with us on a weather product that is going to be included in Rogue Premium that is going to give you insight into future demand on the markets.
so I guess that's a teaser alert.
That's a teaser alert. So
Brendan, you're
come
such a
join
tease,
us.
man.
Come join us. Would love to see you. There's links down below. You can also reach us at rogue@energyrogue.com, and that comes to both Bill and myself. And we would love to have you. We've had tremendous growth, and want to appreciate you. And if you're watching this and you're curious what our outlook, what our price opinion is, don't take this and then believe that the next 12 months are static. And that's the reason that we have our videos every week, because things change. Somebody just recently trash talked us because we discussed $4 back in October. Well, October was a completely different scenario because we were entering winter, we were exiting summer. There were a lot of speculations on what winter would do, a lot of speculations on what production would do, LNG exports, all these variables. And if you would have been with us all the way, you would see that we didn't stick with a $4 projection. So that is a
I
moving
think, Brian, we
target.
learned a long time ago in our career, we never marry or trade.
Yeah. And
You
that's
know,
what
and that's
I mean. We trade, we pivot. But fortunately, we have people like Richard out there. Richard, thanks so much. Good to see you. We will meet sometime. I'm sorry we didn't see each other when we went down to NAPE. But so we talked a little bit about fundamentals and the reason that we have collapsed from 350 down to $1.50. And now that we're heading back up, we've talked about that. If you have any questions about that, shoot them in the chat. So now, what we're going to talk about, could natural gas NYMEX go negative? Is that a possibility?
so. Let's talk about what the difference is there. Okay,
First, before we get there, crude oil did this back during COVID.
yep.
And it is a real thing that can and may happen sometime in the future. So I didn't want to cut you off, Bill, but I wanted to say
Well, the
on a
problem is
different
that's
contract it happened.
what you have to do is how you price things. A lot of times, there are crude oil contracts that are priced based on NYMEX close, and so you're getting your physical price based on NYMEX close. Sort of apples and oranges. And so when crude oil went negative, it really hurt a lot of people on the cash side, not because that was the cash price of crude oil, because it was the NYMEX price of crude oil.
Right.
And so you have to read your contracts closely, and there's reasons why you would do that, and there's reasons why you wouldn't, probably based on your own hedges. And that's the reason you hedge, so you're not subject to the not even, I don't want to call them whims, but to the variances that you see in the daily NYMEX market. And so, can it go to zero? Absolutely. There's nothing that keeps it from going to zero. People have the ability to get upside down in trades and then have to cash out. A lot of people don't realize that when you settle at the Henry Hub, what it means by settle is you can actually deliver gas. If you've sold gas, you can deliver gas. If you've bought gas, then you can take gas physically for your NYMEX contract. So there's a process that they have for that at settlement, but you have to be ready to move it and handle the physical molecule.
So you have to understand what the underlying agreement is. There are lookalike products that are cash settled. If your product is underpinned by a New York Mercantile Exchange or CME Group contract, that is a futures contract that has very specific rules. As a matter of fact, this is the chapter. This is the chapter on the NYMEX rulebook for Henry Hub natural gas futures. And what this says is if you own the contract at settlement, you have to show up with delivery, or you have to show up to receive it in Henry Hub, Louisiana, which is a gas hub. And if you have sold it, you need to find a way to deliver natural gas to Henry Hub, Louisiana for the next month. So that is a physical delivery. And this is the reason that crude oil went negative during COVID, because some people did not complete their contracts and did not have the physical capability to let's see which side of it they were selling. They were selling their crude oil. They had no market for it. And so there were only 2 or 3 physical markets that could take it, and they decided to take it negative. And when you get into the physical market in oil and gas, I mean, I've bought negative commodities before. I have bought that because supply demand is very inelastic at particular points in time. So,
So being the old guy on the channel, I've actually had a contract for nat gas at 11 cents. This is back 104 gas, and it was in the actual contract price was 11 cents. And so this is a commodity that's gone up and down, up and down, and up and down its entire existence. And when it got onto the Henry Hub, it just made it more what became tradable and fungible on the Henry Hub and NYMEX. It had a lot of things affecting it that wouldn't necessarily affect it as on a physical barrel or a physical molecule. So all that to say is, yes, it can go negative, but what's going to go negative is the NYMEX price. Now, there are times, and I think we've learned this with the Permian gas, when it's constrained, when the producer will sell gas at a loss in order to move the oil. So
well, we have a specific case here, which is the case that you're just talking about. So we have a dollar $1.70 commodity today. You have an 81-cent Waha basis, and that is at a trading point in the Permian. So that means gas is worth 90 cents at the trading point. That is not what the production side of it is, because there's transport, there's processing, there's gathering. So those costs, if you add those up, those are probably anywhere from 50 cents, which takes the 90 down to 40, to over $1. So
right.
You're already negative in many spots inside the Permian. So this is one thing I want to be very clear on. Depending on where you are physically in the contracts that you have, that trading point, that's not what a producer gets at the wellhead. And this is the reason that Chesapeake decided to lower their output. And they're really fueling it by not bringing on new production and allowing natural decline to take place. And if this happens on a wide scale, we could go from 105 back to 90 within 16 months. So
well, the Chesapeake's in a unique situation. They don't have a lot of oil that's associated with their gas. And so when they produce a negative, they're actually losing on the asset. Whereas in the Permian, if you're producing gas at a negative number, but you're also getting oil at $78, well, that asset now is still making money. It's just not making money on the gas. It's
right.
making money on the oil. In Chesapeake's case, where they don't have near as much oil, they're losing money on the total asset. So that's why they would begin to shut in or at least not replace it. They're probably producing to meet contracts is what my guess would be.
Mm-hmm. So now, if you want to understand a little bit more on the decline and what that scenario looks like, if a lot of producers do that, reach out to us, connect, register, sign up. It's a month-to-month commitment, $89 a month, $179 for Rogue Premium. Rogue Premium, we will have an onboarding call with you and get into what you want to cover. but we have our own projections of what that supply case looks like, and we've been monitoring and tracking this. And right now, I think that we are looking at a very much a case to where we're going to exit the year at 100 or less BCF a day. So that's a contraction of over 5 BCF a day. So can it go negative? Contractually, yes. And physically, in many places inside the United States, it is trading negative. So that's important to understand, and that's why Chesapeake's action doesn't come as a surprise to me. But a big impact of what the future holds is really going to be weather. And we are very fortunate to have Brendan with us. And Brendan is probably one of the smartest weather brains that I'm aware of. And yeah. So
hey, Mr. Smart Guy.
yeah.
Hey, Mr. Smart Guy. It is February 20th, and I'm about ready to open up the pool. It's so warm here in Oklahoma. Hey, what gives? Tell me what I'm doing here.
You know what's funny, Bill? I was just about to mention to kick out the kiddie pool because right now, I mean, I'm in Chicago. We're about to hit probably close to 60 degrees today.
Wow.
Yeah. So listen, I mean, last time we talked, we were having the discussion about really the tale of two seasons, right? We had the first half of winter that was arguably just as mild as it is today. And then we expected the second half to be sort of that flip, right?
Right.
We got that flip, but it only lasted really for the first couple of weeks of January, right? And so, just like what you talked about here at the top of this video, just like what you were saying with, the projections on nat gas prices, same thing applies to weather, right? I mean, we can forecast out, but the further we go, there is still that uncertainty we have to factor for, right? It goes without saying, but it is important to know. Did we see that cold? We did. It just wasn't as long as we expected, right? So here's what happened. If you can take a look at our screen and turn your attention to the North American side of things. If I was to draw out how we started things, we had an area of high pressure that started out the month of January here in the Pacific. As a result of that high pressure, that allowed for colder air to seep into places like the Midwest. We also, in addition to that, had cold air that was being advected south and east into the Northeast. Again, that was for the first couple weeks of the January month. Now we've actually seen a complete inversion of that. Instead of seeing high pressure out in the Northern Pacific, we're now seeing low pressure. And so what that does subsequently is that actually allows for that colder air and our jet pattern to look something more like this, right? So we get more colder air to take place here in the Rockies and the West Coast, whereas places like the Midwest and the Northeast remain above average in temperature. As you're going to see here in a moment, that pattern is really going to stay in position here for the foreseeable future, at least over the next couple of weeks. So we're taking a look, by the way, at the GFS ensemble. So what that does is that takes 20 different solutions and we average it out into 1 point, right? Or one average temperature. And so as we go forward here over the next several days, the next couple of weeks, you notice very similar trends, right? We keep the central and the Northeast above average in temperature. Meanwhile, places like the Rockies and the West Coast remain below average. Now, why is that? There's a reason for that. It's because think about our snowpack right now. Brian, you're out in the Rockies. You got quite a bit of snow still up in those higher elevations.
Yes.
So that's argumentatively still going to keep those temperatures cold. In addition to that, as I started out the conversation, our jet pattern now is cutting right across the Southern Rockies. And so because of that jet flow, that moves upslope and that continues to add to that snowpack, which would then subsequently keep those temperatures colder. Meanwhile, though, for
colder on the west side, on the west side.
Exactly. Correct.
Okay.
Correct.
Okay.
And so places though, like the Midwest and the Northeast, remember, we're not at higher elevations here, right? We're closer to sea level. And so we're getting Pacific air to be pumped in to the Midwest and Northeast, and Pacific air is mild. So that's not really promotive of some of those colder temperatures that could support things like snow and some of those below freezing temperatures. So that's going to continue over the next couple of weeks. Now, as far as, going into the rest of the spring, really, or as we enter into spring, that's sort of where we see a change, right? So according to NOAA, they recently just put out their climate forecast. they're expecting an 80% chance that we see what's called an ENSO neutral pattern.
Were these magic grits?
Sorry, I don't know what that means.
I promise I'm getting to that. I promise you. I will dumb this down.
Who's Enzo?
80% chance of an ENSO neutral. What that basically means is we're not in El Nino, we're not in a La Nina, we're in sort of a neutral. What that looks like as far as a jet pattern is concerned, that would mean that the Midwest would actually be below average in temperature, whereas everybody else to the south of that, say, the Gulf, all the way down to the Four Corner states, are actually above average.
Now you're talking what time frame? What?
Between the months of, we'll call it spring, so April all the way up into early summer of June is the anticipation of that.
Okay.
But that being said, as far as winter's concerned, the rest of what is winter, we're really expecting a mild finish. And one thing that I want to note too, guys, I mean, we even talked about this before. With that cold snap that we were projecting to be a lot stronger than what actually happened, we still mentioned that by the end of the day, when we look back at the winter as a macro, first half, second half, we're still going to be seeing above average temperatures. And we saw that. I mean, it was overall a mild winter with the exception of those first couple of weeks. That's how we expect it to finish here going into the rest of March and early April.
So what you're saying is...
It's not sorcery, it's science.
That's exactly what I'm saying. I am on the side job, I'm Harry Potter when I'm not a forecaster.
Okay.
So if I'm hearing right and translating it, because I'm just a dumb energy guy. So when I translate that means the rest of winter is going to be kind of very tepid from a demand side of the case, and very tepid from cold temperatures, and very tepid on the eastern half of the United States. The western half is probably going to have some cold, if I'm translating this.
Correct.
Okay.
And I'll even summarize this a little bit further than what I just said.
Okay.
With the Northeast, there could still be some of that fluctuation here in the short term with what we've kind of already seen, which is we get a couple of days of below average temperatures, but then it warms right back up. Don't be surprised if that happens here in the short term. But again, if we're talking more macro, I expect the West Coast and the Rockies to be still below average, especially with that continuation of that jet flow cutting through, producing snow, adding to that snowpack, keeping temperatures cold. Midwest, however, because you have that Pacific flow cutting through, that's going to moderate your temperatures and keep things, like they are today, 50s and 60s. So overall, if we kind of, put a bow on it, pretty much above average to end really the winter season, with some variation taking place here in the Northeast.
Okay. And so I do want to finish out with a little bit of demand. I like taking a look at this. That cold snap that Brendan was talking about, that ended up in one of the largest storage withdrawals that we've ever seen. Not the largest. I think there was a record above that. But if you look at this long-term forecast, or not forecast, this is long-term demand, you will see that during the summer we have lower demand, during the winter higher demand. And of course, the difference is really captured in storage. That's why everybody looks at storage. We keep having higher highs and higher lows on demand, which tells us even though we've increased supply, we've increased demand. So as we look, let me state it this way. This helps people a little bit. Is we are probably a BCF a day oversupplied right now as a country. And that's out of 104 BCF a day. And we went from roughly 90 to up to 105, 104 is the latest number that I've seen. New numbers come out tomorrow. So we've added, let's round it off, 15 BCF a day of supply. We've also added 14 BCF. Given that we're a BCF a day oversupplied, we have added a 14 BCF a day of demand. So what that means is if supply shrinks, if Chesapeake drops their BCF a day, we're now in balance. If other producers follow suit, now all of a sudden supply is going to be less than demand, which the balance is going to come out of storage, and we'll really carve our path forward from there. We have very specific insights on that we share in our community. Would love to share them with you. Come join us. Hope to see you. And if you have any questions, we'll hang around for a minute or two. Bill, what are you thinking right now?
I think we also have to realize that with the increase of gas that we've had, we actually have pushed storage higher, which is natural. It's just what we would do.
What? You're going the wrong way.
Exactly. And so we should come out of storage this year higher than we have in any other year before because of the increase of supply and the lack of demand. And nothing remains the same, I guess is what I'm trying to say. And so as you increase supply, we've increased supply over the increase of demand. Demand usually increases about 3% every year, always has. And that is just population growth and innovation with electricity. The biggest jump we ever had in demand for natural gas was when we retired a bunch of coal plants. And that's when natural gas picked up. Renewables are not picking up the increase in the electricity demand. And so that's being pushed back to natural gas, especially on the intermittent basis. And so now that we've produced more natural gas, we've filled storage. Filled is a tentative word because we never really know how full it is. We think it's somewhere around 4 TCF. That's a full storage. And so what this means is we're going to come out. We were scheduled to come out with storage higher anyway because we didn't increase the storage as a percentage. But that we've seen that be a little bit more than it should be because of the increase in demand. So
okay, so we got a couple questions coming in. Well, first I'll get back to Richard again. Hey, Richard, good to see you. Colby Tiffy, our good friend in Oklahoma City, is asking, should we have more first of the month or daily exposure in a month like March? I will give my personal opinion. We're not financial advisors. Risk exposure is your own. Do your own research. I will give my opinion if it was my position. Assuming that we have a number of days left in the February contract settle, I want to see where the February contract settles. If it settles equal to today, which right now it's $1.77.4, I would go gas daily in March, even despite the low demand. I expect gas prices to be pulled up. I don't think there's much downside in that. Maybe you hold 10 cents of downside, but you hold probably 50 cents of upside to the gas daily exposure. So that's my opinion, Colby. If you want more, hit me up. Just text me. You know where I am. So let's see. Dan Clemens, what about demand driven by manufacturing and industry? Do you track that versus weather? So Dan, what we track is on our demand side of things, and this is on a weekly frequency. So what we track are industrial demand, electric demand, and residential/commercial. So let me take off the exports and the pipe distribution. So if you look at manufacturing and industry, that is classified usually as industrial because these are big plants and big processing units. This has been over history. We have history through 2016. There has been increases because there's been expansions in the manufacturing space in the Midwest. So there's been expansions. There's not massive growth or contraction here. Most of the movement on demand is not going to come from the industrial side of the equation. A lot of it comes from the electric side, which you can see a much larger amount there. So the three areas of increased demand are electric, Mexico exports, and LNG exports. Residential commercial is going to be very weather dependent. Industrial is probably your most stable demand factor. Hopefully that helps. If that doesn't answer your question, Dan, just reach out to us and let us know.
and And Dan, one of the things you might want to watch there is begin to watch how much manufacturing is moving out of Europe and coming to the U.S. This is sort of a new thing that's begun to happen because of the gas price and because of the electricity price. Europe has gotten so expensive that I think it was BASF is the one who has just recently decided to move their manufacturing to Louisiana. So I think those kind of things can begin to have that, but it takes a while for those manufacturing plants to relocate and build back up. So you're talking about something that'll take over 2 to 5 years.
But once they're on for good. That's part of the reason that I pointed out on supply and demand. If that demand of 14 BCF a day, that is very inelastic, meaning that demand is there now. So that means we have to keep producing at this level to keep flat. So that means that's part of the reason that we had a headline bump with Chesapeake's announcement. So hopefully that helps.
And some of those contracts on LNG is 10 and 15 years.
Dan, if that doesn't answer your question, reach out to us and let us know. So listen, Richard, thank you. I really appreciate it. Alleviated some of the concerns on gas price collapse in Texas Gulf Coast going negative. Yeah, I mean, it's already happening to some producers. We actually handle some producers that that they do have that, and they're fighting a lot of friction because producers are having a tough time. I mean, you see headlines on well-financed companies like Exxon and all the bigger players out there, Chevron and all the big names. Chesapeake's a big name. So still want more cold weather. Absolutely.
So Richard, you're going to have to look to Brian now. Apparently here in Oklahoma, we've run out of cold weather. And so I think Brian still has a little bit left.
You'll have to come up to Colorado. As Brendan said, Brendan said that that it's going to be cold for us.
You're going to have to just hit the slopes.
Yeah. Yeah. So Richard, I hope to see you. I hope to see you up here. Dan, thank you. Really appreciate it. Colby, Dan, Richard, thank you for the questions. Vernon, I saw you pop in a little bit earlier. So if you're still here, hey, listen, we'll take a few more questions if anybody has some. If nobody has some, I'm going to give them 120 seconds. So
120 seconds. Are you counting them?
Yeah. I don't.
You have to count them
know.
backwards.
There's not a countdown. I need a countdown, don't I?
No, you do not.
Put in the bottom left-hand corner.
I will promise you do not need a countdown.
I need a countdown.
Do you need a
countdown?
Should
I burn down the joint? I don't think so.
I'll give you a countdown. 5, 4, 3, 2, 1. How was that, man? We already done 120 seconds.
So listen, seriously. Thank you for watching. If you learned anything, please like this, share it. It really helps us. And comment on it. Leave some comments. The live comments, really appreciate. I really appreciate you tuning in.
You got one more, brother.
I do. Okay, what do we got?
And that's a good question. I thought about that when we were talking about Chesapeake. It's going to be interesting. I think they've got a little bit more of an oil position, but I don't know that for sure. So that may change some of their deal. I think in that merger, it's going to be basin by basin.
So my gut answer, I would caution this with an asterisk, and I would need to do some research. And we are not financial advisors. See all the disclaimers below and read them if you can't get to sleep. With the merger between Southwestern and Chesapeake, I see that as following suit. Probably the bigger leap is to go to other similarly situated producers that will have an impact on the portfolio. There's a large amount of people looking at Antero, at Range, at Comstock. These are big producers in big basins, and they will move the needle because if they don't replace their decline, we will decline significantly because, let me share this back again, because when we look at the supply side of the equation, so the short answer is all the disclaimers below. Yes, they will. With the merger happening, they will. So if we look at This is the natural gas production by shale region. You can see this light blue, that is the Marcellus Utica. Chesapeake has a lot of positions up there. And then the next is the Permian. And we've already discussed this. The natural gas prices is negative. So the additions there are not going to be quite as sensitive to gas price. They're going to be sensitive to crude price. If crude continues its march up, Permian will probably continue to grow. After that, you have Haynesville. Haynesville is already starting to drop. Let's take a look at them one by one. So I don't want to take too long on this. So Bill's on target for this. You can already see kind of a slowing on the Permian starting to happen in January. We tipped down. So I see a little bit of that treadmill happening because there has been reductions in Permian rigs.
So Brian, before you get there, Joe, let's give a little bit of practical advice. If I remember correctly, it's the Chesapeake management that's going to run the merger company, right?
That's correct. That's why my simple short answer is yes. Southwestern is not going to do anything to threaten this merger.
Right.
So, again, not a financial advisor.
Just an observation of many years of watching mergers and mergers and mergers.
So you can see after the climb on Haynesville that we really have not continued to grow. This is since 2022, this Haynesville. We've been relatively flat. I expect Haynesville to probably decline back down, probably down to this 14 BCF a day level. But let's take a look at Marcellus Utica. Now, this is an interesting one, mainly because I don't see that rapid growth. This is treading water, and that's before Chesapeake's announcement, which Chesapeake is very active up there. So
that could be an infrastructure issue, though. Appalachian always seems to be an infrastructure issue.
Well, but part of this infrastructure issue was solved, I think, from here to here. I think there were some expansions. So we went from 34, 35 BCF to 36. But the other infrastructure is not going to get fixed. So
and the pressures are different in that area too.
Hopefully that answers your question. If you need any more help or guidance on that, just let us know. And listen, I appreciate you tuning in. And listen, last thing is that we would love to see you inside our community, and we would love to see you interact, engage, and questions, Colby, questions like this we cover in the Discord channel. So for $179 a month, you have access to that. So listen,
man, Colby, that's cheaper than OU season tickets, man. You got to be on this thing.
So listen, we would love to see inside, and the main thing is don't get caught without understanding what's happening beneath the surface, because there's a lot going beneath the surface. And I really want to thank Brendan for sharing this with us. I asked him about it yesterday. He hopped on. So thank you, Brendan. Brendan, any closing thoughts?
Bill, time to get out the kiddie pool. I hate to tell you.
There you go. I'm telling you. Just be sure and don't go off the high dive in the kiddie pool.
Yeah.
So listen, I'll speak, and then I'll let Bill walk us out with final words. But my final words are: watch your fundamentals, because they will guide the long term. The long term is going to be very important here, because we do have massive demand coming within the next 12 months now, because we have incremental LNG export, incremental Mexico export, and that's where we start to look at international implications. So be educated on that. Don't be caught not knowing what's happening on the fundamental side. And any closing thoughts, Bill?
Just remember that now natural gas is an international traded commodity. And so there's always something going on that's affecting what's happening here in the United States. It's always outside of the States. Pay attention to that. Guys, be kind, be nice, and subscribe.
Yeah.
Well
So
said.
listen, folks, thanks so much. We will see you next week and appreciate you tuning in.